The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And of course, I follow Steve Rhodes, 2 hours he had, Monday, 9 o'clock till 11 o'clock, right? Then I come on, followed by Larry Pesavento. Then we've got Daryl Martin, got Dave White, got Ken Shreve back here with Tom O'Brien. Tom and Daryl were at a very successful workshop down Saturday in San Francisco. Congrats. And that's really terrific news. And what I'm looking at here is the S&P futures, June futures. I did not want to hear that. That's not a go. That's not my backup going wild. This is the emergency alert detail. Can you believe that in this day and age of instant notification on cell phones, on any way you want, that we are still paying for this emergency system? I mean, what on earth are we doing with that? Anyway, let's get back to our story. The E-mini made a peak C on Friday. It went to a higher high. After all that negativity in the morning, it still went to a higher high to 58.75. Pulls back because of the Cyprus fiasco. I don't know if fiasco is the right word. We're going to find out what the right word is in a few days. A confiscation. This is, whatever it is, it's just terrible. Plunges down to 1529.50 last night. Gave a nice little signal, a little buy signal. But anyway, back at the ranch, what you want to look at is look at the 120-minute chart. Remember on Friday I was talking about the chances that we just got a peak F in the 120-minute chart at 1558.75. We had broken the up channel. The up channel was now resistance. The former support became resistance. That's the traditional way of looking at these trend lines. And then what happens is we gap down overnight and we plunge down to where? To the 200-period moving average is at 1531.30. The S&P E-minis went down to 1529.50. They spiraled above the 9-period exponential moving average now and are trying in leg A to create support being at 1546 at the 1542 level, the 9-period exponential moving average. I suspect a chunk of the work has been done on the downside. A chunk of the work has been done on the upside. And what I said to my subscribers was that we probably will see some kind of a low by mid-session established and confirmed, and that we got to watch that the whole resistance area with 1546 as being kind of tough to break out of. And we've gone to 1547.50, but this is going to be an area to watch. Now, what is very important about this move is that when you're looking at that gap up at 1552.50, that was at 50 minutes past 5 on the 15th on Friday. My suspicion is that it'll take us at least another day or so to get close to that, to really start testing it. Then we should make a left side, right side price time match. Would not be surprised just eyeing it right now is by the, today's the 18th, it'll say by tomorrow sometime, we'll have a much better feeling for whether or not, and I believe that I have to say that at this particular point, all the evidence to this moment suggests that we will go to leg D in the Dow. Let's just run the numbers and I'll go through some of the technicals and we'll take calls at 877-927-6648. The Dow's down 37 at 14,477 after being down about 100, I think it was. I was so busy watching the futures I can't remember. The S&P's down 7. It's a little weaker. It's actually quite a bit weaker than the Dow. And that is, let's see, 0.25 for the Dow, 0.449 down on the S&P. The comp index is down 14 at 32.34. That's even with Apple. 5 points today, 448. Apple's making a nice recovery attempt here. And what's most important is that the gold was up way sharper. I'm not saying I'm absolutely convinced, but I feel rather confident in the assessment that it won't be until April. We could have counter-trend bounces here. but it won't be until about April, maybe May, when we can see a really decent move in gold. I mean, a decent, I'm not talking about days or a week, I'm talking about weeks of an upside move. That's just the way I'm looking at it right now. Could be wrong. Now, what's important with that is that copper has come down to the 3.4 area. It's down 8. I mean, that is really not very good, but it's still within the trading range. It's just bouncing sharply between these different points, and I haven't taken out the low yet. Crude oil is down 24 cents. Now, bonds are up over $1 and 3.30 seconds. This is important. Let me just go there. The dollar. No, I just said the dollar. I meant bonds. Bonds. USM 13. Look. On the 120-minute, I didn't finish that up. I did finish the TLT. Right, let me just do this. Bonds try to rally today towards the 144.23 area. That's the that is the 200-period exponential moving average in the daily chart. Had a great move. It's still a nice move. But my suspicion is, based on a number of factors, and let me just grab the TLT, which is the Lehman 20-year T-bond fund, mainly because I've just got such nice continuous charts. They're not smoothed out. They're not the short-term charts of the futures. The whole thing about the bonds is that the MACD and the stochastic in the daily chart are not yet ready. I think by the end of the week they might be ready for a bit of a bounce. After we make leg D up in the Dow, that's just the way I'm looking at it. Now, of course, obviously, this is not locked in stone. It can't be, because the action could have a domino effect from Cyprus, and we just have to deal with that as we go through each day. I think it's till Thursday we have to wait before they have some kind of final decision. And it's a bailout, and it's a bailout in the worst possible way, to take the innocent people. Those are really, you're trying to get folks from other countries that have invested there, maybe illegally or whatever. But whenever they do this, it hurts the folks that are the ones that can at least afford to have this happen. Anyway, back to the ranch. Here we go. The TLT is very important because at 116.10, the 9-period moving average support, with the TLT up 97 cents at 116.73, I'm really looking at the weekly, and the weekly says the candle of 2 weeks ago, that deep, deep red candle that you can see here. If you're looking at my charts in Tiger TV, you will see the middle one always is the weekly chart. That is saying that although the stochastic is possibly making a W formation, unbalanced volume is good, relative strength is kind of weak, making a W formation at the bottom. What is important here is that you've got a potential for an oval formation, and those oval formations can either break to the downside or they can be turning points to the upside. So I'm going to be watching this real closely, because if on Friday afternoon at 4 o'clock, this coming Friday, the TLT is above 119.67, closes above 119.67, that's going to be very positive. It doesn't have to close below the candle of last week of 114.74. If it holds the high of last week, 115.88, that's going to say, hey, be careful. You could be making some kind of a U-shaped turn over here to start to rally upwards, and that would say the market is becoming overbought. And that's my impression. That's why we are cautious. We've taken profits now in some of our stocks. It's the fewest long positions we've had. Still have the DDM from 81.78, I think it is. I always have to try. Yeah, I think it was 81.78. Yeah, 81.78. And it's trading now at 80.681. Very nice. This is 200%, 200 times the Dow 30. It's a nice position here. I'm expecting that's going to make its leg D. DDM, and we just look at it right here, then we'll go to our callers. Yeah, peak C, held the 9-period exponential moving. Look how important. Folks, learn these techniques. Go to my CD introducing the ChapmanWave methodology. Doesn't talk about the moving averages other than in great detail the stochastic and the MACD. But I do, in my webinar on the moving average, I spent a lot of time on just that, on that 9-period moving average and what it imparts, what kind of information. So I'm going to go to Mike in Long Island, New York, and we're going to look at, hi Mike, how are you?
Good, how you doing? DSW, we discussed that last week. They're reporting earnings tomorrow morning, and I want to know, I'm short a little bit. Should I add to it? Is there a worry that it might go to 72 or...
Okay, so let me do this. Yeah, I'm going to do this live. I like people to see how I do this. This is DSW. Oh, is this the shoemaker?
Correct.
Okay, no, they're not makers. They are sales. They have the stores, right?
Right, out of Ohio.
Okay, and I haven't been in for a long time, but I know they have a really good selection. So here we go: A, B, C, D, A. Oops, no, this is either E/A. Oh, okay, I'm getting it right here. This is my monthly chart I'm doing right now. Whoops, FB. Talk and chew gum at the same time. Okay, G/C. All right, so now we're looking at DSW trading at 67.61 in the monthly chart. The monthly chart says it's at a straight-up move. It's walked the 9-period moving average. In fact, wow, these are amazing things. From the low bar of $2.66 back in March of 2009, the month of the low, it went peak A, B, C, and the moment it broke and closed above the 9-period moving average in the monthly chart in July of 2009, only twice after peak C did it go close underneath the 9 EMA. Then it ran up to D. And then it had an instant restart, A, B, C, D. It did spike underneath that, but closed above it in the month of August of 2011. Then it goes to a brand new A/E, F/B, and a G/C. Now the question is, can markets, monthly charts, culminate at a G rather than a C? And how many times have I found that stocks only can go to, the count is only C, and then it breaks down in a monthly chart? And I would have to say, hardly ever in all these charts, thousands of charts, have I seen a monthly chart go to a peak C minus and fail, unless it's an IPO. Of course, that's completely different because it's only had 3 moves since its IPO in the monthly to higher peaks. So now what I'm looking at, I've got the up arrow. I'm going to keep the up arrow and say to it, you proved me wrong by going just to peak G. The high was 7. Oh, did you notice that it had a 72 round number high?
Yes.
Okay. Round number high. Okay. This is going to be very easy to assess if certain things happen. You want to prepare for it. So I'm going to help you prepare. We'll be right back. We're on with Mike in Long Island. We're looking at DSW. David Sam Walter. And it's trading at 67.62. It made a round number 72 highs, 10 cents, $5 off that. I'll be right back and we'll assess the potential.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman. Dow is, that's covering it. Dow is down 33 at 14,480. S&P's down 8 at 1552. Composite is down 13. I was talking about gold before and saying it was off its highs, but still holding quite well. I suspect that it has some upside here, but how it handles the whole week is going to be very important. And I suspect that the Dow will get to plus territory. If it's not today, it'll be tomorrow. And at that particular point, what I'm really looking for is a situation where that's going to be the test of both bonds and gold and the volatility index. We're not going to get into that right this second because we're looking at DSW Inc. It's a shoe stores. And the question is, Mike, just remind me again, when's the earnings announcement?
The earnings announcement is tomorrow morning. I'm getting a different count in the monthly. I get to an F. I get an A at 42.91, or I don't know whether I can.
Wait, just give me the month.
Yeah, the monthly. On the monthly chart, let me just bring it up here.
So in November of 2010, you get a D. Then the very next month, I get an instant restart A, but it could be a parallel count, but I get an A. Then it goes to a B.
An A, peak A at 42.91. That's
42.91.
February 1st, 2011. And then from that point, I get to an F.
You got different.
The D, peak D at 41.84.
The month of?
Month of November 1st, 2010.
November 2010. I get 37.84 as the high. November of 2010. Huh. So you get different data, huh? I tend to stick with this particular data because whenever it's smoothed out, people inform me later on, or it's corrected. It's usually corrected in favor of TradeStation out of the many different services. There are others, of course, also, but this is the one that I seem to get. However, it doesn't really matter because I'm looking at the way that the month, because I get a G, so you get an F, I get a G. So we're in the same ballpark that says this is the area that you got to be careful. And what or G/C. So this is what more important than anything else is that if you can see my chart in the weekly chart, I've got a rectangle forming, and that rectangle that's forming is telling me. Let me just open this up a little bit so people can see it here. Space to the right. So if anybody's interested in this particular stock with the earnings coming out, so the earnings reports tomorrow, and then they'll have a conference maybe later in the day. Is that it?
No, it's tomorrow morning.
Okay. So and that's pre-opening, right?
Yeah.
Okay. The way I see it, if there's going to be a pop to the upside, 72, the round number, it has to close above that, and it has to close at 2 out of 3 bars. That would be 2 out of 3 weeks. I don't know, wait that long. What I am going to say is that the long-legged candle of the week of the 7th of December, 72 high, 65.23 low, and the candle itself, an open of 68 and a close of 67, that's the area, and we're right there now. And you can see the magnet of that long-legged doji. You know, the work that I've done on the long-legged doji tells you that that's an area of importance. So that even if it pops up, the way the chart is looking, it's going to be back down to test that area. So your risk is time, but of course, a 6-point pop to the, or 7-point pop to the upside is not that great. 10% if you're short. So right. I don't know if you want to. Do you have a small short position now?
Yeah, I guess it's not worth playing. It's not worth adding to. I'll just keep the small short position.
That's what I was going to recommend. Exactly.
And then
I tell you why, Mike. I tell you why. Because if it fails, then the support that's important will be, first of all, 65.23, the low of that long-legged doji candle. Then the little mini long-legged doji candle of 62.27 back on the 11th of January. More important, everything about this chart says it's going to test the $64 level in the 9-period exponential moving average. Even though the MACD and stochastic are still good, they are starting to decline. And the weekly is the tip-off that at the last high, all the technicals were much weaker. So even if it pops, my thinking right now is the downside is going to have more activity. And I'm looking at a number of the retailers, and we actually have one in the opening call that we short, and it's come down a good 4 points. So my suspicion is this will also do that. So I'm going to recommend that you stay in this position. If it starts to show weakness tomorrow, that will tell you can start adding, because the monthly could make a hat-trick top. So I hope that helps you.
Yes, thank you.
Thank you very much. That was Mike in Long Island. We'll be back straight off this Dow's down 35.
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Let's just go through a couple of things. In the technique that I work with, this little chart right here that I'm showing, that's the 120-minute chart. This is the XLF. This is the S&P Select Financial Spider Fund. Look how it held the 200-period exponential moving average, this kind of golden-colored moving average. And then it merely goes peak A, peak B, peak C, and then it goes to a peak D, and there's something that I call the instant restart. We always spend a lot of time on this when I do either my webinars or my Master Traders series. There are a whole bunch of variations. I don't have to talk about them. This is a very simple, straightforward one, and I'll type it in here. It's called ChapmanWave because it's the only technique that has it. Instant restart. Right there, capital R. I don't know why it always misses going capital. There it is. Right there. And that goes to an A and a B and a C and another D. How many Ds do you want to see before you can believe this is an amazing technique? Because when it gets to D, that's when you've got to be careful. That's where you can, but don't always have to see a decline. But that's where the sharpest decline often happens, and plop. That's exactly what's happened. So on the 120-minute chart, we're now in a sell mode on the 120, but that's got nothing to do with the daily, because the daily is still expecting, in the ChapmanWave methodology, a potential leg D up 1 penny or more above 18.48. That was the high of last week, 18.48. So when you look at the XLF, you can get, say, Bank of America, BAC. Bank of America acting very well today, and it should go to leg D, 1 penny above 1266 high of the 15th. And if it does it today, that extends leg C. I suspect it won't do it today. It'll do it tomorrow or the next day. And the weekly chart is in leg C. That's still very positive. And the monthly chart is a very strong leg B. Now, so let's go to Wells Fargo, WFC. I don't know if I've updated this. No, I haven't. So this is a new move to the upside. And it's A, B. Everything's in peak C. I have absolutely no reason, technically, not to expect D's to come probably this week. The weekly chart's in leg E, a little extended. Monthly chart, finally, one of the few bank stocks to actually go to a leg D. And that's really exciting in the monthly chart. Wells Fargo, trading at 37.75, down 46. Let's go to J.P. Morgan. Now, J.P. Morgan got smacked Thursday night into Friday. We were very fortunate. We were able to garner huge profits in the put position, the March 50 White Lightning put position. And right now, it is trading at 49.41 JPM. And that might be a little harder in this particular move to get to a leg D. A lot of things are happening. So I got no other wave count. This could fail. And in the whole sector, maybe you'll get one that does fail at a peak C minus. It will if it breaks. 46.85 was a low of the 26. It's at 49.44. I would say even if it broke 47.78, the low of the 27th of February, then that's going to be a C minus. But the weekly chart, this is the thing that gets me a little bit. Why I thought that J.P. Morgan was the most vulnerable when we went short, when I told subscribers on Thursday to go short the March 50 put, use the put to go short, is that I've got a doji E, leg E, and there could be a doji candle for J.P. Morgan on the weekly. And that kind of coincides with a very choppy period I suspect is coming up. I think now, although I see more upside, the upside is probably more limited. And I suspect over a period of weeks, we're going to start to see lower lows and just minor nominal new highs. That's the way I'm looking at it. I don't know if that's correct, but everything here seems to concur that that's a high possibility. So let me just look at the EUR USD. I know we have a lot of listeners always looking at the currencies. I've got a trough E, not a trough, a leg E to the downside. It's trying to form some kind of support, but the monthly chart says, "Oh, be careful! That's like an Eiffel Tower peak D top," and there's a good chance that the euro dollar, if it breaks on a close, it goes under 1.280. Anytime this week. It just has to go under it. It doesn't even have to close it. But if it goes under it, my target says over a couple of weeks' time, we will be looking at 1.266, the low of the week of the 16th of November. Why? Because the strength of the dollar right now, the daily is it has made a peak E, and the technicals are weak. I suspect the dollar is not going to break to 83.17 just yet. Well, maybe it does. It'll be leg F, but limited upside, just like the market. I think it's going to be pulling down later on, and that'll be the week of the 5th of April. There's a left side, right side price time match going back to the 84.10 area. But the most important thing is I suspect we're going to have a high-level consolidation between 81, maybe even 80.54. I don't know if it'll go down that low, but let's call it 81.51 right now, with limited upside to maybe 83.30 to 83.60 before it can get to the 84.10. I wouldn't be surprised if it has that pullback, but 84.10 would be my target on the upside. The USD JPY. Now, that's interesting because that made a peak C and a very sharp pullback within the confines of this falling axe formation. If the USD JPY Japanese dollar, United States dollar, Japanese yen currency pair is able to get anywhere into it's at 94.91. If it's able to get to the 95.60 area in the next 2 days, then it's going to test the very important 85.96 downtrend line. Well, it depends when it comes in. But if it breaks that and closes above 96.16, then we're going to go to leg D above 96.70, 96,704, I suspect. Then it'll go to leg D. And the monthly, if it's this week, will extend leg E. If it's the following week, that'll make an F. And then you've got to be careful, even though the technicals are very good. So I'm going through all those things. And then we also have to look at high-grade copper. I'm going to the K. I think K is what we look at, but let me just double-check. M. Yeah, K is what we're going to go to. HGK. That is the May. And that says, be careful. This weekly is now breaking. Remember I spoke about those two trend lines? Two lines are so... Folks, learning how to do a trend line is really important. Look at the way the trend line is making lower highs and lower lows, and then higher highs and higher lows. So at the top it's making lower highs, and the bottom it's making higher lows. And all of a sudden this week, I wouldn't say mostly because of Cyprus and the the fear factor there. I think this might be an economic thing. That's telling me when I'm looking out to late April, May, where I think the biggest decline in the market comes. This might be a heads up. So I'm going to be watching this really closely. So the copper's at 3.43, and it's underneath the left side, right side price time match. It's a couple of days late, but it has broken down, and that's trough leg E to the downside. Normally you get a bounce back into the arch formation once you're broken down below, in this case, the low of the 9th of November, 3.4375 was the low, and we've gone to a lower low at 3.4175. So this is going to be very important, and could be a little heads up to say, when I'm looking at my Dow Quartet, Dow Quartet is a little index that I made up of GE. Let me just show you again the 3 time frames. You got GE kind of weak, not doing well, made a peak. See, that might have to be re-notated as a G. I'm almost sure I'm going to have to make that a G. And a peak D in the weekly chart. It says, hey, I need a little timeout. I've had a spectacular move going from the 20 area up to the 20, almost 24. I need some time to regenerate energy. That's kind of what it's saying. And at the same time, and I should mention we are long from lower down, but I'm watching this real closely. Now look at IBM, the second one in the quartet. That says it's at peak C, and it should go to a leg D. Weekly chart broke to a new all-time high, and now I've re-notated. Let me get rid of this. The monthly chart, and I'm very comfortable with this. An instant restart, a flat-based restart, says that at some point IBM will go to a new recovery high, leg D, in the coming months. Watch out, because 177 will be the downside target when this has finished its move to the upside. So that might only be 40 points, maybe 45 points, even 50 points. It's only 20%. But hey, that could be a real tell on the market. And then you got Triple M, the third one in my quartet, made a peak D. It doesn't have to make an E, but it's acting very well today. Leg C up in the weekly chart. It should go to a D. And leg E in the monthly. That's interesting. And UTX is the final one. It's actually my pilot light indicator. It's been superb. All-time high. Double check. All-time high. Leg C. Same as IBM. This is so interesting. Everything's fitting together. I've got leg C in my monthly chart of the Dow. No, I've got leg. I've got so many charts going on here. Leg C in the monthly chart. Oh, man, this is going to be very interesting. So UTX is very important here. It's only made a peak B. There's no other way I can count that. That says it should still make a C and then a D. It could do that very quickly. And it's so close, in fact, to 93.50 was the high on Friday. 93.44 is the high so far today. So all of this is just fitting so beautifully into the schematic of what I've been showing subscribers for a while. Now, the rotation is what's really important. I just saw JCPenney flash by. And JCPenney, I've spoken about this before. JCP, they call themselves now, but everybody has to say JCPenney to make sure that it's the same company. Is in leg C up in the daily chart. Now, what I'd said is, I don't know about the CEO, whether he's able to turn it around or not. But what I do know is that I have a completely different feeling. An aura about JCPenney at this particular time. I'm starting to see the name in the advertising section more and more. I'm beginning to see really nice ads once again. I've always had Target and JCPenney have always had very nice ads on TV, and I think I'm starting to see that again. I haven't had a chance. I don't know if I'll have a chance this weekend. I really want to go to a JCPenney and look around. But the last time I was there was just a tremendous improvement in the same store. It was like night and day going to the Christmas season, between the fall and the Christmas season. So I think this guy, it's a pity he blabbed so much about a new JCPenney and all that stuff, because when you have a trouble with funding, cash flow is so important, and they have a real problem. That could be the killer. Maybe he's doing everything right, but it's just too late. I don't know. All I'm saying is that I do see a difference, and I like to give kudos to someone who's really trying to turn things around like he is. So NQM, I just wanted to look at this because we looked at it on Friday, had made a peak D top, that candle of this is the NASDAQ 100 June 2013 contract. It had made a high on the 8th at 10 o'clock at 2817.00 in the 120-minute chart. It went into this rectangle formation. It stayed in the rectangle formation, broke down today, last night, and it's turned around beautifully, and it's completely filled the gap if you go to the wick before, but I like to go to the last bar and the first bar. The last bar before the gap is on the 15th at 5:15 at the close of the day, 27.93, and it gaps down tomorrow, and those are the bars that I'm looking at. And what I will do is I'll change the color, but I'm going to just quickly put this in so you can see that it is acting very, very well. Let me just change the color there. I'll make that some kind of make it a nice green there. Green, I don't know if you can see it. There it is. So that's the NQ. Beautiful comeback from this morning's low of 27.48.25, and it's in leg A to the upside. Now, you can get an A that fails, that single leg A syndrome that I talk about. I suspect that this has got tremendous support. It's at 27.85, 27.72 to 27.72 to 27.70 are the two. That's the 9-period moving average and the 200-period moving average. Tremendous support. So now I'm going to go to Joe in Boston. Hi, Joe. How are you?
Good. How are you?
I'm very well, thank you.
Good. I have no position now. I wanted you to take a look at BA, please, on a monthly.
A monthly, yes. So, folks, we're looking at Boeing. It made them once upon a time. There's that beautiful instant restart. From the low, just let me do this real quickly because it's such a beautiful chart. From the low of 24.73 in March of 2003, it goes peak A, B, C, D. Instant restart. I just spoke about that. And then it goes to A, B, C, D, doji top. And that doji top is in May of 2006. Pulls back, holds the 9-period moving average, then goes E, and then F back in 2007 in July, so that was 3 months before, October, 3 to 4 months before the market's top, but it did retest it in October of 2007, so 107.15 and 107.83. Beautiful double top formation, and it plunges down to a trough E, and the trough E is in March of 2009, goes peak A, B, C, D, pulls back, starts a brand new buy. I'll call this a brand new buy mode. Goes A to B, and now we're in E/C. Just in case, I need to have a double wave count. I don't know if is that what you get?
I haven't done it yet. I kind of just was thinking about it.
Okay, you can see the chart in Tiger TV?
Yeah. Mm-hmm.
Okay, have a look at that, and we'll be right back with Joe in Boston talking about Boeing.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. If you're interested in my services, my opening call, go to the front page. You get 2 weeks free. Extremely comprehensive look at the markets using the ChapmanWave. I teach it. I show the methodology. The charts were either long or short. I explain exactly what we're looking at, why we're looking at them. It's a lesson in itself. And we've had some really nice picks. We had a fabulous option trade on Thursday, Friday. And we've had some nice stock trades. And we're all along the Dow Diamonds from March the 4th low. So we're on now with Joe in Boston. We're looking at Boeing Airlines, Boeing Company. And I've got a brand new, I have to give it an alternative, even though I've put the up arrow, I'm giving it an alternate count just to be safe, but there is nothing wrong in the monthly chart thus far because it's at 81% in the stochastic, and the MACD is just still positive. It flipped positive this last week, I think, pushed it positive. What I am looking at, and I don't quite get it, because let's just say they resolve the problem. It seems to me that there are going to be a lot of airlines saying, you know what, better take another look at this. If they resolve the problem, but they need time, we want a little bit. We don't want to make a mistake now. I suspect that the good news is just built right into the stock. I didn't even see how much more that it can go higher on a short-term basis. At 86.49, the high of Friday, I suspect I'm getting a peak F here, but the MACD and stochastic are still outstanding in the daily. I needed actually to break down to get a confirmation. Yes, you got a question.
It almost looks like if you pull up like the Celgene chart, it was going sideways for a while, then it just spiked up, then it went sideways, and then it went again.
Well, the difference with the Celgene chart is that when it broke out, folks, we're looking at SCLG, it broke out of a beautiful long, so look at this chart, therapies, cancer, inflammatory diseases, etc., Celgene company. But look at that beautiful, this is like the gold chart. This is a beautiful cup and handle because it had the time and it walked the 9-period moving average. I love this chart, and I've got it in F/B in the monthly chart.
How can it be an F with the MACD expanding like that?
Because what could happen is that the MACD fast-moving average starts to flatten out, the stochastic pulls back, and what happens is it takes time, but it doesn't take out the high that's made this month. It has a high-level consolidation, like the GLD and the SLV did. You remember I spoke about the fast-moving average, and then the SLV had a fantastic retracement, but it didn't break the old high. So the chart that I'm looking at here says there's a big difference. Celgene's a company that doesn't have a problem like Boeing has right now. It's a problem with their thousands of engineers. They're going to resolve this. But, I think it's all built into the price.
Right. Me too.
So I'm actually looking to short this. But it could be a short with with a very tight stop. And the reason being that I think if there is bad news, it's going to be so quick that you can't get in to short it. And if I'm wrong, I see limited upside from here right at this particular moment. And I would have a very tight stop if we were able to get it at the price that I want.
What's the buy and a pullback? 80?
Now, the pullback, I would rather have time than price. I would say between 83 and 81, that's going to be key because by the close of the first week of April, if Boeing is underneath 81, that turns the weekly chart into, that's not a very pretty candle because what you're going to do is try to fill up the whole candle and the low of the candle is down at 80.96. So then the 9-period moving average is 80.16. So I'm not expecting that much in points other than a sudden surprise and maybe take profits. And Z in the den says, I see no short whatsoever in Boeing. That's the whole thing. I think it's going to be a surprise, and I don't mind taking a tiny risk here because it would be no more than 2-3 points. Hey, Joe, I hope that helps you.
All right, thanks, Basil. Have a good day.
Thank you very much.
Bye.
So, folks, this is the end of the show, and stay tuned for Larry Pesavento, another wonderful show with Larry coming up, and I'll be back tomorrow. Don't forget my opening call, front page of TFNN, and have a great rest of the day.